we successfully brought inflation to target. And part of it had been that, like other major emerging markets, we responded to inflation in 2021 before the great inflation of 2022 set in. The advanced economies did adjust policy aggressively to bring inflation to target, right, or towards target. And global uncertainty abounds, and at the moment it has generated this uncertainty, and there is a question mark about whether inflation could be resurging and whether central banks are complacent about the re-emergence of inflation. And added to that are the geopolitical risks that are adding to the uncertainty, right, whether it is in the form of tariffs that are not quite trade related, maybe even politically driven in some instances. And from the textbook, it tells us that when tariffs rise, right, that you have got inflation rising.
Do you think that's what we are seeing here in South Africa and globally? Do you think there is a resurgence then of inflation that you're expecting?
Well, we expect inflation to be creeping up. We hit a low of 2.8%. The expectation is that it will start to rise, but our baseline is still that it will rise towards our target, which is 4.5%, which is the middle of our inflation target range. But that is the baseline scenario. To the extent that there are tariffs imposed, and to the extent that other countries might respond to the tariffs that are imposed on them, you are going to have a rise in global prices, one, and secondly, you are going to have a slowdown in global trade, and that could impact adversely on global output.
Does that affect your outlook for inflation, though, for the rest of the year, and also for growth here in South Africa?
It adds to the uncertainty. So in the previous meeting that we had, we took a scenario approach, and we had a scenario where we said, if tariffs are imposed, this is how we think the global economy could evolve, and we think that inflation might pick up and it might force central banks that have embarked on a process of reducing restrictiveness in monetary policy to pause or even reverse that course of removing restrictiveness.
Are you thinking about that from the perspective of the Federal Reserve in the U.S.? We're seeing more of caution taking place because of what you're saying, this uncertainty. Is that part of the calculus that you are thinking potentially the Fed is going to have to stay higher for longer, therefore that will affect your policy as well?
Well, the decisions of the Fed are decisions of a major economy. We are a small open economy. Those decisions will affect the global economy, and how they feed into our own decision-making process is through two channels. The first channel is the trade channel, which in normal circumstances it would just be that a slowdown in economic growth in the U.S. leads to a decline in our own exports. By contrast, when the economy is doing well, our exports to the U.S. would also do well. Enter tariffs. Once tariffs enter that space, to the extent that the U.S. disinflationary process would slow down or even reverse, it might force policymakers there to reassess their position. Which way they assess it is another matter. The point here is that we would then be affected by a rise in global inflation, and the extent that recalibration of policy leads to tightening of global financial conditions, capital flows, and a repricing of South Africa.
Do you think that will affect then foreign direct investment into South Africa, if we do see it play out the way you just outlined there?
Foreign direct investments does not so much respond to monetary policy actions, but the trade policy actions would could actually affect foreign direct investment. How? At the moment, as a small open economy, what we do is we attract foreign direct investment that produces goods that we sell to other countries. So we have got American companies that have established shop in South Africa that are producing to export into the African continent, and some of them back into the United States. And if that is to affect them, then it would affect our FDI.
Really quick, Governor, it sounds like you're saying tariffs are the number one risk that you're facing as a central bank governor in setting policy. Is that fair to say?
Well, tariffs are a risk to the global economy and to the global disinflation process. And what I'm saying is that a year ago, it was not something that we were worried about because it didn't exist. Now that it is here, we have got to take that. We have got to take that into account. And to the extent that it is clear these are the tariffs, and we know that is what we live with, then we can calibrate policy to that extent. The problem is that there is an announcement of some tariffs, a suspension, a restart, a threat to increase the tariffs again, and that adds to the uncertainty.
The confusion is creating a difficult task for you.
Well, I wouldn't quite call it confusion. I would call it the uncertainty that is added, and that is a difficult one for central banks to deal with.
We have to